Hey guys, doing assignment 9.3 A. I am your host, Doug Gray. Gonna help walk you through this one. It's just pretty straightforward. We're gonna take three assets. We need to show depreciation for those assets, and then we need to show a gain or a loss when we sell or get rid of them. So one of the things, I've got my screen split into three sections here, so don't be confused. I did this so you don't get dizzy watching me. I'm going to move a few things around, but mostly everything's going to be right. Shouldn't be too confusing. First thing we need to remember is this formula. I have it highlighted in yellow, and it's the how to find annual depreciation. We're going to use it several times. Cost minus salvage value divided by useful life equals annual depreciation. So we're going to have to remember that. We're going to use it a bunch in this assignment. Got it written for us. We can refer back to it as we need to. I also put on my Excel spreadsheet basically my answers of what I'm doing. I did this on the WileyPLUS. I got it all right, luckily, and so I wrote it out again so that we don't have to go back and forth. So the first thing we're going to do is on January 1. If you read this, it says that we have three assets. Those three assets are some machinery, a forklift, and a truck that we're going to discard. So we're going to first, we're going to take the machinery. Pretty straightforward. We buy the machinery for $55,380. And then we're going to, basically debit the accumulated depreciation account for equipment, $55,380. And then we're going to take it off the books by putting it into the equipment, crediting the equipment account, $55,380. Now, it's not as straight. I mean, that's pretty straightforward, but here's the thing is it has a 10-year useful life. If you read, we bought the equipment on January 1st of 2007. This is now, the machinery was retired January 1st of 2017. So that's 10 years. So it was useful for the full 10 years. So we're going to take our full value and put it in. If we wanted to do the math, we could come over and do that. We could come over and take our cost, which is 55,000. I've got my calculator out here. I'm doing this with you. 55,380, and we're going to minus our salvage value, which is 0. And then we're going to divide it by the useful life, which is 10. And that comes out with 55,530. That's its annual depreciation. Now we used it for 10 years, so we times it back out by 10, and it gives us the same number we started with. That's how that works. Moving on to the next one, this is June 30th, and on June 30th, we're going to take care of a forklift. And the forklift was sold for $9,000. First we need to find the depreciation expense on that. So we're going to take the forklift price, cost, which was $2,000. Look up in my top left-hand corner, $23,400, and we're going to divide it by, or we're going to subtract the salvage value, which is 0. Then we're going to divide it by 5 to find our, and I did the math wrong on my calculator. 23,400 divided by 5. There we go. And I come out with 4,680. So, but here, this is interesting, and don't trip up on this. So we sell the forklift in June 30th. So we have 6 months of use out of this. So we actually have to take this now. If you see over here on my right side, I have it highlighted here. We actually have to take our 12-month a year and divide it by 6. And so we're going to actually get 2,340 is our depreciation expense for this year, because we really only had it for 6 months this year. So that takes care of those two right there. So now we're down into having to get rid of this machine. So we have to record the sale of the forklift. So automatically we sell it for $9,360. So we've got a cash of credit or a debit of $9,360 because we sold this. So good for us. But we need to do the accumulated depreciation of equipment. So we're going to, oh, and by the way, we can also take that the bottom, the equipment, to get it off the books. Pretty easy, those two. We know we brought in 9,360, boom, right in the debit of cash. We get it off the books on equipment for the full value of 23,400, boom, right there on the bottom, ready to go. So now we're going to find our accumulated depreciation of equipment. We're going to take our 23,400 and we're going to subtract the accumulated depreciation of equipment, which we know how to do this, and you're using your formula above, and you're going to come up with $7,020. So if you're wondering how to get to that 16,380, so we first find our depreciation value using the formula right here. Remember this formula. I'll bring over the tab a little bit so we can see it. This finds our annual depreciation. So we're going to take the cost, which is 23,400. We'll minus the salvage value, which is 0, and then we'll divide it by its useful life, which is 5 years, and that's going to give us our annual depreciation. The annual depreciation for this is going to be, we've already decided above, we had to put that number in, 4,680. But again, we only have this machine for 3.5 years. So we're going to take the 3.5 years, times it out to get our 16,380. Now, in order to find our gain or loss on this piece of equipment, we subtract the 16,380, the accumulated depreciation of equipment, against what we bought it for back in 2014, which is 23,400. It leaves us with $7,020. Now, this isn't done at this point, okay? Because we made a deal, a pretty good deal apparently, because we sold this machine for 9,360, but it really only had a value to us of 7,020, which leaves us a gain of $2,340. So there's our gain on disposal of plant assets right there, bottom right, left-hand corner, 23,400. Moving on. So now we have a truck, and we need to find its depreciation expense. Using the same formula, we're going to take the cost. This time we do have a salvage value. We're going to subtract out that salvage value, and we're going to divide it by its useful life in years, which is 8, and it's going to give us a number 2,964. You might have different numbers, but that you're playing with, but this is how this one works out for us. So we take the depreciation expense, we then credit the accumulated depreciation of equipment, and now we have to get the truck off the books. So we take, we're going to take that 2,964, and we're going to take it and times it by 6 years. So we see that we bought the truck on January 1 of 2012. It is now December 31st of 2017. So 12, 13, 14, 15, 16, 17, 6 years. So we're going to take it and times it by 6 years to come out with that accumulated depreciation on equipment. And that's 17,784. We disposed of it. We just got rid of this truck. We discarded this truck. I don't know why. Maybe it just smashed by a tree. Who knows? But it's gone. So $26,056 was what we paid for it, and we can then subtract out our accumulated depreciation on equipment to come up with the loss that we had to take of this disposal of this plant asset. Hope that helps. I'll bring this cursor back over here on my right. So those are my answers, the formulas I used, and how I did the math. Hope this helps. Appreciate you guys watching.